When we talk to home loan customers, overwhelmingly they ask for an offset. And actually, we interviewed people a few years back here at UNO and found out that about half of them didn't actually know what an offset was or properly how it worked, which was surprising given that they all wanted an offset. So we wanted to explain a bit more about what they are and also when to get them and when not to get them, because they're not a one-size-fits-all. So the easiest way to think about an offset is that it is simply enabling you to put all of the money that you earn on a day-to-day basis or every month into an account that is essentially offset against your mortgage. And so if you had a $500,000 mortgage and you had your $10,000 pay go in or $5,000 pay go in or 15, whatever the number is, then it would be like your balance was reduced temporarily until you start spending that money. And that's the critical part of when to consider an offset or not. Offsets really only work if you've got enough money in them to make the offset enough interest to make paying for them worthwhile. So they're not free. Typically, if you have a lender, they will have two products, one with an offset and one without an offset, and the one without an offset is usually comes without a fee that might be somewhere in the order of magnitude of $300 to $400 a year. And so if you run some fairly basic maths on interest cost and how much money you need in your offset to make it worthwhile, it's somewhere around $5,000. That's the easiest way to kind of pitch it given current interest rates at around 6%. So if you get an offset and let's say you have $8,000 of net pay that goes into an account in 1 month, and 4 days later you have $4,000 worth of interest payment that comes out, and you now have $4,000 left in that account, and then progressively you spend that $4,000 over the rest of the month, and then a month later you have another $8,000 go in, then you have roughly $2,000 on average sitting in that offset account over the course of the entire month. And so you would actually be losing money by having an offset. You would be better off having a lower interest rate and simply making extra payments when you can. So it's not to say that most people can't benefit from offsets if you have even some degree of ability to pay more than your repayments and therefore build up a kind of an extra repayment buffer, if you like, which you should absolutely do. Then offsets can be a really convenient way to do that because you don't really need to think about it too much. You simply put your pay where it goes and you spend your money as you would normally, and the magic kind of just happens. But therein lies the problem, is that for a lot of people, they don't actually see that they're making extra payments. It's not something that they're doing consciously, and this is what's sold as a benefit, but it can actually be a bug as well, because what people will tend to do is treat money in their accounts and their offsets as essentially free money. It's available. It's available to spend because it's not committed to the loan. And simply the act of moving it from your day-to-day account into the loan mentally locks it into the loan. And there's an observation of people who have offsets who are actually taking longer to pay down their loan than people who actively put money into their loan and see their available balance going down. Now, in practical terms, it often doesn't make a difference. If you've got money sitting in your offset, you can draw it out tomorrow or today. If you've got money sitting against your loan, you can get onto internet banking and move it to a transactional account and draw it out today. You still have the same level of access to your money. It's just that mentally you've shifted money from available sitting in day-to-day accounts into the loan itself. So there's absolutely a bit of a watch out. Now, if you are going to use an offset, one of the best ways to make use of them is actually to combine an offset with an interest-free credit card, and only do this if you are diligent with your money and diligent with the transfers of your money. But in essence, what it allows you to do is to put all of the money that you earn into your transactional account. You spend all of the money in a 30-day period on your interest-free credit card, and at the end of the month, you have an automated payment that moves the money right at the end of the month to that credit card, and as a result you have a maximum amount of money sitting in your offset for the entire month, and it's only in the last couple of days before you get paid again that you would then pay off the credit card, and then you repeat the process. So hopefully that demystifies offsets for you a bit. Maybe you'll be one of the people who's not in the 50% or so that wanted an offset but didn't fully understand them, and they come with, as I said, a bunch of opportunities to help you pay your loan down faster, but a few watch outs for people who don't use them the right way, or perhaps shouldn't be using them at all. If you want any help with offsets or mortgages in general, get in touch with the broker. They can help you today.